What's up, investing legends? Today we welcome Jay Young to the program. Jay is a fourth-generation oilman and is the founder and CEO of King Operating Corporation, a Dallas-based oil and gas company. Jay's new book, The Upside of Oil and Gas Investing, is out now and available for purchase and download, and teaches everyday investors like me and you on how to reduce risk and capture long-term upside when investing in oil and gas. And in this episode, we dive deep into what Jay calls the new school methodology of oil and gas investing and what differentiates it and what makes it a superior way of investing in oil and gas versus the old school way. We kick off the episode with me asking Jay about the various methods, the various strategies that are used to make money as an oil and gas investor. There are so many different ways. We've had many oil and gas guys on this show, and I got to tell you, no one has the exact same strategy. Everyone is using a slightly different strategy to get to the same result, which is create return for the investors. And then finally, we spent a large portion of the episode going over the business plan and the tax benefits involved with this new age oil and gas investment strategy. What is it exactly that Jay and his team does differently than all of the other guys? Well, we get into it in this episode. It's an incredibly lucrative business proposition and quite an eye-opening one at that. So if you are new to oil and gas investing, or you have been investing in oil and gas for some time and you're looking for a different way or a different frame to think about oil and gas investing, this episode is for you. So without further ado, everyone, let's welcome to the show, Jay Young.
Welcome to the Investing Secrets Podcast.
Jay, welcome to the vault.
Man, I've heard so much about you, Danny. I can't wait. This has been a dream.
Purely horrible things. I only horrible things.
No, it's been good.
No, man, I'm excited to chat with you because, you know, and as I was telling you before the show, we've had other oil and gas guys here. The thing that seems to be very interesting to me as an outsider, because I don't even though I dabble in a lot of different alternative asset space classes.
Yeah.
I'm a dabbler, right? Hey, I like to learn a little bit. I'm in and I'm out. The thing with oil and gas, though, and this is where I want to start, is there are seemingly so many different strategies and ways to make money. Right. And almost every person that I've had on my show has a different investment thesis. Right. And so maybe like high level first, explain the King Operating investment thesis. Right.
Yeah.
And then I'd also like to explore some of the other strategies and why yours is better. Right. Or why you've decided to choose your niche. Right. Or your thesis. Yeah. Right. So let's start there.
Okay. Great. Well, I wrote the book, The Upside of Oil and Gas Investing, because I wanted to know, hey, I don't want the downside of oil. We want the downside. We want the upside of oil and gas investing, right? So, but I did because for years, decades, me and 99% of the other promoters out there that do oil and gas deals, all they do is they go drill wells in areas. I mean, it's like you find an area and it's a good prospect, and we have them sent to us all the time, and they go, yeah, come on over and drill this well. And then you either hit or you don't. And then you either have it offset or not. You know, it's like this little, and you either hit or don't hit. I mean, 80% of the people that invest in that kind of a strategy are not even going to get their money back. Okay. I mean, you're in the hotel business. I mean, you know that when you buy a hard asset in hotels, apartments, or land, or at some point, you're going to get your money back. You're going to make money because it's an asset deal. So that's what I had this epiphany on when I was talking to this guy, David Moore with Nightvest. He's in Dallas. He's probably done 200 deals, probably more than that now, but he sold half of them. He sold half. He manages half. They have 60,000 doors plus. He's a pretty good guy, but he just found this one little way to just scale it, right? Do this one, do this one, do this one, and just scale the investment. And so that's what we do. So what we do is different than anybody else that you can put $200,000 in to an investment as a personal investor, but it's not different than what people do in the high institutional investors, family offices. How do they invest? They invest like we're doing now. But they're writing checks for $5 million, $25 million bucks. I bring the retail investor, the person that needs the 100% write-off, they need the 80% first year. I mean, the people that love this model and love what we do, I like it. And that's why I wrote the book, because I wanted people to know that, hey, you know what? We're different. I'm fourth generation oil and gas guy. I've been around the oil and gas business my whole entire life. And it says down here on the bottom how the new model works and why it puts the traditional model to shame. And it's on Apple, anywhere. I've got a podcast, which I'm so happy to announce that I'm going to have Mr. Danny Gould on my podcast pretty soon. Yeah, right?
That is correct. Yeah.
But I've also got the book, an audio book. It's got my voice. If you like listening to my voice, if you don't speed it up a little bit so it sounds like a mouse, but I do the audio book. I want everybody out there to know there's an incredible way. There's a better way to invest in oil and gas, and it's our model and what we have today. And I'm trying to get the word out. And so that's why I appreciate you having me on, because I know you've got a lot of great people on that listen to you and take your advice. And we welcome that. We'd love to, partner up with you and also your people.
Yeah, man. So definitely there's a link to the book that Jay's going to give us, and that link is going to be in the show notes and in the description. So I'm sure that you go into way more detail in the book than we're going to be able to kind of get into in this show, Jay. Yeah. But high level, you say, there's the old school way and then there's the new school way. And if I'm unpacking what you said correctly, the old school way, and it's a way in which most people lose their money, is you just kind of like go drill hunting, right? You go hunting with the drill and you just kind of go in, shit, nothing's there, right? Okay, moving on, right? And then meanwhile, all those investors are SOL, right? And then the sponsor just kind of gets to pack up and try again, right? So it's
good.
Gambling.
That's a great thought, and it allows me to think about what we're doing now. I've got so what, like we have a 60,000 acre ranch right now that's in the a 60,000 acre ranch that's up near Amarillo. And there's been wells drilled out there for years and years, but vertical wells, a lot of vertical wells. There are some horizontal wells. And what these wells are is like they're in this area, and we've identified like 60 locations, or I'm sorry, 200 locations to drill on this 60,000 acre ranch. Okay. So our goal will be to drill 20 and sell it. Okay. Sounds pretty simple, but it takes a lot of work. It takes a lot of, landman, the Billy Bob Thorntons of the world. Or his son.
I love that show, man. It's so good. Just have this season 2 dropping soon. I'm so excited.
Man, I know. Yeah. Sunday night. My wife and I will definitely be there, and I'll do some podcasts next week. I'll say, hey, matter of fact, Danny, you have the first question to ask me next week, week 1, season 2, true or false. Ask me a true or false question next week. Text me whatever you need to do on Monday, Tuesday. I will do one specifically for the Danny Gould question of the week, and I'll tell you if it's true or false. Okay, so just watch it and go, hey Jay, was that really true? And I'll tell you whether or not it's true or not. Okay. Anyway,
right, sounds good.
So the 60,000 acre ranch, there's 3 areas that we're drilling in right now. There's three specific areas that we're drilling in. We're drilling in the Bivvens Ranch, which is at 60,000 acres. We can drill 200 wells there and sell. Drill 20 wells there and sell. There's 200 available. We drill 20 and we sell it. That leaves 180 wells open for a public company to come in and say, hey, yeah, the public company can drill the other 180 wells. They get some cash flow. We can probably sell that for $400 to $500 million bucks. It takes us a lot of equity to get there. It takes us some debt to get there, but we should be able to make $300 to $400 million in the next 3 to 5 years based on those numbers. Okay. So easy peasy? No, it's not. Why does institutional money do these kind of deals? Because they can, right? Why are we doing it? Because I've got several funds that we're raising right now, Fund 3, Advisor Fund, Fund 2, Cop 2, whatever, that's picking up the pieces. They're picking up the pieces of equity. It takes a lot of equity to get there. That's what we're doing now is we're raising that equity. We've drilled 2 wells so far. We did 750 barrels of oil yesterday. Yesterday, we did 750 barrels of oil in those 2 wells. That's pretty good. If you don't believe it, multiply 750 times 30 days in a month times $70 or $60 a barrel. There's some money right there. Okay, so right now that project is generating 750 times 60 times 30. That's $1.3 million a month right now in cash flow for those 2 wells that we have. We're going to be drilling 2 more wells pretty soon. That should be up to $3 to $4 million, $5 million on those 4 wells when we get there. So, but we're going to drill. It's like an apartment complex. It's like this development here, Cherry Creek. I mean, what land goes for here is a lot different than in my little hometown of 12,000 people. You could probably buy the town in Sulphur Springs, Texas, for what you could pay for 1 acre out here in Cherry Creek, Denver, Colorado. But you develop that one area and then you sell. We're doing the same thing on the Bivvens Ranch. We're going to do the same thing in the Mid-Continent section, 6 counties up north of the Panhandle of Texas. We'll be drilling wells in there and just drilling them up and selling. And we'll do the same thing on our non-op fund that we have. And we've participated with companies such as ConocoPhillips, Choya, Dominance, Car Resources, other people. So it's like we're building up 3 different boxes or buckets, if you will. And how do you grow those buckets up and sell them? The same way that a lot of success stories have done, such as Trevor Reese Jones. He did 7 deals, 7 years, $7 billion. We have Double Eagle, Cody Campbell, the guy that did the Texas Tech. He's behind Texas Tech football right now with Patrick Mahomes. But Cody and his partner, John Sellers, have sold 4 different deals for like $20 billion in the last 10 years because they find an area, they increase the value and sell. We're going to be doing the same thing here on this fund that we have right now. And, clients can look at it and see if we have something available. We're selling out because we're getting ready at the end of the year and everybody wants to be on that Bivvens Ranch. And, let me see if I can get this real quick just to show you something. You probably don't see this very often, but I'll show it to you because I know you're excited, Danny. I'm your old man, Danny, and you're going to be excited about coming out here, going through the area and seeing what this looks like, but right now there's some gas flares on 2 Bivvens wells that we have right now.
Yeah.
What those are is that's 2 wells that we have producing. The one lateral goes down 9,500 feet and it goes 7,500 feet north. And then the other one you saw, there's 2 together. That's another well that goes down and like 6,500 feet south. Those are 2 laterals underneath the ground that we're developing, and they're producing at the rate of $1.3 million right now a month. So that's good news. That's good news for our investors. And we have some spots left on that fund, which is the COP 3 fund that we can do. So that's kind of what, I mean, our fund is and what we do is just different because we've had some success. I've got a lot of good people, and we're able to scale investments like this because you can't just raise, $3 million, $5 or $10 million to do something like this. You got to raise some money.
Yeah.
You got to be able to raise some capital, and we've been very fortunate to be able to do that.
So, and correct me if I'm wrong, right? Because I really want to understand the strategy. what you're implying is that your strategy is different because you don't just pick one spot. You find an area for development, like a large. It sounds like a fairly large area, right? And then you are scoping the area for wells, proof of concept, essentially, right? Hey, right. we're gonna maybe take out 10% of the possible drilling sites in an area. Take those out, start to drill, create some cash flow, right, for this opportunity. So it's not just like you're just taking a piece of land and reselling it. So okay, you prove the concept out, you drill the well, you drill a couple wells, and then at that point you go find an institutional buyer that is interested in taking out the rest of doing the rest of the drills. They've got the resources and everything to do that because they know that's expensive. Setting up those wells, I know, is like really, really pricey, right? So you're like, hey, so now we're going to take and we're going to sell it off, and then essentially you're going to be sold on a multiple of like the potential output of that particular site. Is that more or less the? Yeah.
And it's normally a public company, and the reason why it's a public company is because they could go to Wall Street and say, yeah, okay, here's the cash flow, here's the possible locations that we can drill in the future, the 180 on the Bivvens Ranch, and they say, well, we need $300 million to go buy this, whatever it is. We need $300 million to go buy it, and they say, hey, it sounds like a great deal to us. We want to grow, let's buy it. So Wall Street or public companies, and there's 1,000 of them that are looking for something like I'll say 1,000, but there's a lot of public companies that will need the Bivvens Ranch, and they'll overpay us for it because they're going, oh man, this is great. You can't go from where we were in the very beginning and start it. You can't go from where we were in the very beginning and start it because they don't want to take that chance of failing. So when we drill 20 wells or 10 or 20 wells or whatever, they'll say, okay, yeah, we like that. We're in now.
So one question that kind of popped up into my mind as you were describing this strategy is like, because you're buying a large area and you probably have like some confidence, right? That okay, maybe if you just buy one little site, right? Mm-hmm. The chances of that one little site having oil is like a lot lower. So you're just playing a probability game. And that's why your chances or likelihood of success is a lot higher than, say, somebody that's just going to like drill in one specific area. Is that kind of what I'm hearing or?
Yeah. Well, yes and no. And the reason why I say that is because in our last fund, there was some more exploration type prospects in there that, remember on Landman when they went out to the oil field and he goes, yeah, you got to drill now 9,000 feet, 10,000 feet. When you do, you're going to hit the wolf camp and you're going to drill it, and you're going to hit, and you can drill horizontally in it. I mean, pretty much where we are drilling right now, we know the oil and gas is there. Okay. Now you could have some mechanical failures. Oil and gas prices may go down. There's still not a perfect scenario, but you pretty much know before you drill the well what you're going to have. Like the Mid-Continent area, our second fund, we have, when the money comes in, it's going to go to three different buckets, one of three different buckets, either Bivvens Ranch, which that's our first priority because the wells are doing so well there, or Mid-Continent or this other. But you pretty much know before you drill a well what you're going to get out of it. Mm-hmm. Okay. Now, what's the risk? Well, prices could continue to go up to drill them.
Yep.
And tariffs and all that. And instead of costing $8 million, it may cost you 10, 12 million, which is not as good if you're only going to have, a $15 million return because of oil and gas prices. So the big game here is more or less, we need to drill these wells not cheap, but we need to decrease our drilling costs down to a good level to where, like the first two wells on the Bivvens Ranch cost us $12.5 million. I mean, we're going to get that down to 8 or 9 million, because of doing it over and over and over again, drilling the same well, but it does. So, there is a lot of exploration. the way that people used to do it and the way that I did it for years and years with partners, I mean, partners were okay with that. They're like, yeah, okay, let's go drill a well over here and up in the Panhandle, and it's a really deep test. But if we hit, it's 100-1. If we don't, it's a dry hole. And we did a lot of that because that's what clients wanted at that time. But since I'm like, well, now I don't like that strategy. I don't want to drill dry holes. I don't want to drill exploration type risk. I want to take the risk out of it and drill wells where you don't have as much risk. And that's what we're doing now. So we're taking a lot of the risk out of it. We're hitting singles and doubles. That's kind of our strategy now. I mean, we were looking for the fence, judging. We were trying to air and judge it, for a long time. And now we're just like, man, you know what? If we can drill and hit wells every time we drill a well, if we hit, we get some production. Yeah, it's not going to be a monster, but hey, who cares, man? Let's just build up some assets and sell. Clients will make really, really good money. I'm really happy to say that too. It's all about them.
So from my understanding too, there are other ways to create value, right, in oil and gas. So there are some folks who, and it sounds like you kind of do this, where you're at the start, right? You kind of come in and you're getting the project started, right? And then maybe you sell it off to somebody, they're going to finish it. There's other groups too who, correct me if I'm wrong, but they, it's almost like they come in and find ways to like extract the leftovers, right? This is a very insider language here, right? I'm just kind of using like language that I understand, right?
Yeah.
So is that correct? There are people that are like, hey, a well is like 80-90% dried up, and someone's going to come in and they're gonna scoop up the extra 10%, and then like there's allegedly money in that because they can get them, the wells for basically next to nothing. Yada yada.
Yeah.
Yada.
Well, you're right, and there is, and your numbers, your numbers are to be kind of flipped, because when we go out there, let's say we go out there to Bivvens Ranch and we say, okay, we're going to drill this well all the way out, and I'd love to be able to go over horizontal drilling with you and how horizontal drilling works and the shell and the perforation. But let's don't go into that because we don't have the time, but I'd love to go over that sometime with you, or look at our YouTube channels and we'll be able to explain it. But when you drill a well initially, let's say I spend $10 million, I drill a well 9,500 feet vertical, 6,500 feet horizontal, and I go out there and I frack it. I put it online. I'm only going to produce about 10 to 15% of the oil that's there. Okay. Man. That's it. 10 to 15%. And later on, I could go back in and I could refrack it, or it's hard to refrack wells. And normally they last long enough anyway to where it's kind of like, it's a big, but there's also some people that'll buy that well when it goes down to, 10, 20 barrels a day or something, and say, okay, we'll go in here and they'll buy it for almost nothing, but then they'll also come in and put some money into it and want to increase the value by drilling and completing wells, and they'll spend money doing that. So you're right. I mean, we looked at that model on some of the wells that we've done, but it's just like there's not much upside in that. To have a well that you're producing 20 barrels a day, you'll spend $400,000 or $500,000 and it's doing 30 barrels a day, 35 barrels. It's like, okay, yeah, it's not very exciting.
Yeah. Understood. So it's a different approach. For sure.
Safe. So like a safe deal though.
Sure. Yeah. Like that would be a true single, right? Like, hey, we're not going to crush it, but we're also probably not going to lose a ton of money either. When you say the new way, right? So I don't know that we fully. So when you say the new way of drilling, right? Like the new. Like, are you specifically referring to this method or this methodology of acquiring large parcels of land and then, drilling until you're, creating that value through finding different wells and selling the rest off to a larger buyer? Is that kind of That's the new way, is what you're saying.
Yeah, the new way of drilling. There's always technology. There's so many things. We've got 4 engineers, and they look at it and they go to different conventions and different conferences and things to learn. But yeah, you're right. I mean, it's like in Midland, where my family grew up in Midland, Texas. They that's where Landman is, but that's where my family grew up. But those wells were vertical wells for the longest time. I mean, forever. And then all of a sudden, 2000, 2010, 11, 12, something like that, they started going horizontal.
There.
And they found a way to drill wells horizontally in the Wolfcamp formation and then be able to frack them. And that's the difference. And they've gone from 1 million barrels of oil a day in the Permian Basin, Midland, New Mexico, 1 million a day to 6 million a day. 1 million barrels a day to 6 million barrels a day. 6 times. Yeah. You're producing 1 million barrels a day. You're what how much is that? 1 million barrels a day, times 60 times 30. I mean, that's about 2 billion. You're doing 12 or so a month, so, but it's all because of the new technology. So we pride ourselves in watching what's going on. So when we drill wells, we want to be as efficient as possible, drilling the best oil and gas wells we can, because what we want to do is show that public company, hey, here's 20 wells that we drilled. And you know what? We think we could have gotten better results if we'd have done this. Just came out, the new fracking or the new perforations, or there's just so many different ways to do it. But we want to show them. We want to show an oil and gas company that, okay, we drill a well that costs $10 million. We're going to get 1 million barrels of oil out of that well over time. And what our goal would be is to spend less and make more, right? Buy more, sell. But so it's be say, hey, you know what? We feel like you can drive your costs down of drilling those wells to 8-9 million, and you can get 1.23 million barrels of oil every time you drill a well. So the only thing out there is the commodities or the oil and gas price, because that's how you put your economics together. How much does it cost to drill a well? How much oil will you get over time? And what's the oil and gas price? And this one, you don't really know what it's going to be, but that's where the break evens come in and where the cash flows are. But if you could make these two better, which is our goal on everything that we do, how much does it cost and how much oil can we make? Those are very, very important. And when those are done, and those are better, let's say, they're done a lot better, or the clients go, yeah, okay, we can make more money.
So so I want to briefly touch on some of the tax benefits, right, associated with oil and gas. The first one that comes to mind is: are there any differences in the tax benefits passed along to the investors of your strategy versus, like, say, just investing into a single well? Right, because
it's all
same thing.
Same thing. Yeah, that's the attraction that people have had for years and years and years. There's this attraction of the oil and gas write-off, and you could decrease your adjusted gross income. So if your adjusted gross income's $300,000 this year, you invest $100,000 in oil and gas, and you say, okay, well, I'm gonna write off 80% of that this year. Then instead of paying taxes on $300,000, you pay taxes on $220,000, and that's kind of how it's worked. But it's the same, and that's a good point. And that's what I'm saying is, hey, you know what? Their deals put together, like ours from the standpoint of tax benefits, but the difference is going to be that what's going to come out on the other end. Where's the upside in their deal compared to what ours is? And yeah, they could get lucky and hit a 5-to-1, 10-to-1, but that's it. It's going to be a 1 out of 10 shot.
The other question that I had as you're kind of going through the business plan is like, how long does it typically take for you to execute on this business plan? Like, let's say the Bivvens Ranch deal, right? So from the time that you acquire the land to the time that you sell, right? What's the typical turn time on that deal?
Yeah, our big goal is 2028. And what we drilled 2 wells this year, 2 wells last year, 2 wells this year, drilling 4 wells next year, and then that's 8 wells, and then 8 wells the next year. We'll keep a rig right out there. Keep a rig running, 16 wells. So that's going into 2028. We should be at a very, very good spot. But I will say this about the fund, and there's always somebody out there that wants to partner up and they have a need. And so we're going to put these 3 assets that we have on the market every year. And it's not going to be this year because we're just kind of getting started. But next year, we'll put the assets on the market for somebody to buy a part of it or all of it every year, because you never know. And we could sell down. We've done that before when we sold 25% of a deal that we had, gave clients back all their money. We've done that before.
Yeah.
So that's the opportunity. But in answer to your question, in the real scope of, is 2028 3 years and drilling 16 to 20 wells, because you have to drill those 16 to 20 wells, and then each well is going to be worth, say 20 wells is worth 20 million each. That's $400 million. You want to get to that scale before you sell.
Okay, that makes sense. And the property was acquired in 2024 then, or 23?
23. Yeah, about 23. We drilled 2 wells so far, and we're drilling. Yeah, so that was last year, and we've drilling 2 wells. You're ready to drill 2 more wells. So yeah,
23.
The way the ranchers are, these big ranchers own 60,000 acres, and the Bivvens family owns several 100,000 acres, but this one's 60,000. But they say you have to drill so many feet per year. If not, you lose it. And so we're up against the wall. I say that, but we need to drill 2 wells or 30,000 feet this year, last year and this year. And then next year it goes to 60,000 feet, which is really equivalent to like 2 wells or 4 wells a year.
Yeah.
If you don't drill it, you lose it. So sure. It's a great deal if you have drilling dollars. And if you want to not pay huge bucks for this upside, because like the Permian Basin, where I was mentioning Cody Campbell earlier, he's paying $100 million for acreage.
Yeah.
Just acreage. We're not doing that. We have a farm out with a ranch family that wants cash flow to come in. And if you can't do the cash flow for them, then man, they kick you to the curb.
So it sounds like the Bivvens Ranch all in is around a 5-year hold or so. Yeah.
3 year, 5 year, 3 to 5 years. Yeah.
3 to 5. Yeah. 3 to 5 year hold. Okay. Understood. Yeah. It's interesting, man. Well, there's just so many, like, it sounds like there's different ways to, kind of achieve, partial to full return of capital, return of principal rather, to the investors early, which is always nice. It's always a big plus, right? When they feel like, hey, I've got my nut back and now the rest is just gravy, right? Like that's always nice. We could probably talk for a lot longer, man. And I know that I'm going to be on your show soon. But nevertheless, it's great to have you on. And obviously, you guys are doing some really big things. So glad to at least gain a little bit of knowledge off of you. All right. But before I let you go, we're going to have you lead the audience, Jay, with one final investing secret. Take it away. Yeah.
Who are you investing with? What kind of person is it that you're investing with? And what's their beliefs? And really, what is their beliefs? And if they look down in the core, you look down in the core of them, or, I'll do a Bible verse with you. And it's not because I feel like that's the way that we need to do business is Bible verses, but man, I'll do a Bible verse with you and I'll tell you exactly how I feel and what I believe in the project. But there's no guarantees in this business, and don't let anybody ever tell you that there is. But you know what? I want to give you the best shot of investing. And it's like you, Danny, you're going to do your due diligence before you invest. I'm going to introduce you to some great people that I know in my network that you may be able to partner with. And you got to hang around great people. It's all about relationships. And I've got a ton. My wife doesn't like it when I throw names like Nolan Ryan out. I'm good friends with him. There's all these different people that I know and that will give me a good, hey, that Jay Young guy, he's a man of his word. I'm never going to tell you that there's a guarantee in this business. I'll tell you the upside and the downside of what's going on, but I think that's it, Danny. And I think the person behind the curtain is what kind of person's there.
Yeah, man. No, I love that. It's true. Like there's a lot of opportunities out there, right? There's a lot of opportunities for investment. And so, really understanding it's, I tell everyone, hey, you got to focus on the jockey, not the horse, right? Like the jockey is the most important thing. And cause there's always going to be hard times, right? There's always going to be unexpected surprises. You just want to partner with the kind of people that are going to be able to handle it, right? And that have proven before that they can. Jay, you've been awesome, man. It's been great having you on. And we're gonna, like I said before, your book's gonna be in the description box down below. Jay, it was a pleasure, man. Thanks so much for stopping by, and thanks for stepping inside the vault with me.
Absolutely, Danny. I appreciate you having me on. I tell you what, I hope that it came across well, and I look forward to getting to know you better.
Yeah.
I mean, you said something about the future Vegas, man. I've been going to Vegas since Elvis. So I understand Vegas, and man, I love to have those conversations with you. So Danny, thank you very much for having me on. Man. I look forward to staying in touch, and look forward for you to do our podcast next week.
I'm excited. It's going to be a lot of fun.
All right, man.
All right.
Thanks
Jay.
a lot.